Great. Now, ladies and gentlemen, this is what we are doing today, and I've been able to share this question with you. I chose this question because it's a question that has got what here, share exchange, where instead of us paying a right price, us paying for the share that we have bought from the other company through cash, we give them our shares in return. All right. So this is an FRA question, but very, very applicable to AFR. Trust you me 100%. So here, you know, I told you the other class that if you go to a group consolidation question, ensure that you know the shortcuts, right? Yeah, but now here when I read this one here, I'm timing myself, it's 9:38. When I come here, they have asked me to calculate goodwill for 4 marks. So they want me to calculate goodwill for 4 marks here, you can see here. So you see now there is no way I will be able to run away from what here, from this calculation. So this calculation, I have to do it, ladies and gentlemen. So of course I'll be doing it. Now I'm very, very sad. Why should he be able to ask me for goodwill and I wanted to run away from it? However, not very bad. I'll be able to get everything here. All right. So you're told here, allow me to read this pretty fast. On 1st November 2023, KEEP Limited acquired 75% of interest in Lima's equity interest. So we have here KEEP. Then we have what we call Lima like that. So we have acquired 75% of Lima. There is nowhere, they've told us that even after we've gotten this big shareholding, we are going to cede our control. No. We're going to give our control to another party. No. So basically, we are the majority shareholder here. Automatically, if you're the majority shareholder and we're not going to relinquish our controlling interest, we're not going to give our business to another party to manage it on our behalf, automatically we're the controller. So it means that KEEP becomes the parent and the Lima becomes who? As a subsidiary, because 75% is more than 50%. Yeah, and then remember that the date of acquisition, what we call DOA, date of acquisition is 1st November 2023. 1st November 23, like that. That is the date of acquisition. Then I would want straight away to get the date of what year? Financial statements. So the date of financial statements, ladies and gentlemen, the financial statements given, I can see them here. They are dated 30th April. So these ones are dated 30th April 2024. Dated 30th April 2024. Meaning that, ladies and gentlemen, this will be a partial year. Could you kindly count number of months here? From this date to this date, how many months do we have here? I told you the other time, men will always get those months very easily. Ladies in class, our girls in class here will always get timing, yeah, the date counting, number of months counting. I don't know what happens to our ladies here in terms of counting. They are never precise. You'll see most of them giving me the wrong answer. Let's bet here. You'll see all of them. I think the ones that I have here are bright people, I can see some of you have gotten the joke, We shall overcome. We shall overcome. We shall overcome. Are they 6 months? Are they 6 months? Have you counted very well? Joseph is saying no. So you see, you're counting November, December, January, February, yeah, March, and then the whole over April. There are 6. Good to see Cyprian here. 6. There are 6. Are we together? There are 6. Are we together? There are 6. All of us are able to see that, isn't it? So then I'll be able to do here what we call time proration. Time proration, which will be 6 out of what here? 6 out of 12. Which will be 6 out of 12. Just a minute, 1 minute. All right, ladies and gentlemen, let's continue here. 6 months, all of us in agreement. It is 6 months. We have been able to count so nicely, so nicely. So we shall do time proration pro rata for the subsidiary figures. All right. So then I can see here that the acquisition was completed through a share exchange, share for share transaction, where KEEP Limited exchanged 2 of its own shares for 3 shares in Lima. So remember, for the students who are doing especially FM, advanced FM, we normally say exchange ratio. Exchange ratio. In terms of shares, you take the number of shares of the parent company divided by number of shares of the targeted or subsidiary. Remember, company number 1 is the parent. Yeah. Company number 1 is the parent. In terms of shares, this can easily confuse somebody who is doing AFM. Because remember, in AFM, we also say exchange ratio in terms of EPS. We talk of EPS of the target company all over EPS of what are the predator. But please don't use these in AFR, because in AFR, we normally use number of shares as the criteria. A number of shares in this case here, then, we'll always take number of shares of company 1 all over number of shares issued by company 2, share to share exchange. So number of shares of company 1, we can see where KEEP is the parent, remember, is giving 2 of its own shares for every 3 shares of Lima. So this exchange ratio will be 2/3, not 3/2. Will be 2/3. Very, very good. Now, what are they telling me here? Because they want me to compute, ladies and gentlemen, goodwill, I have to read these notes a little bit. Yeah, I can see KEEP Limited here. The first one, of course, you are able to see here. Details of equity as at this. This will help me in terms of getting my goodwill. So details of equity on the date of what year? On the date of acquisition. 1st November 2023, the date of acquisition. Yeah. So we have here KEEP shares, whatever. I can see equity reserve. I can see retained earnings. Yeah, they share the question, Papa Europe bond. Great. Somebody should be able to assist me do that. Then we are told in note number 2, KEEP Limited follows a policy of revaluing land to market value at the end of each reporting period. Lima Limited had previously measured its land at historical cost before being acquired. Since the acquisition, Lima Limited land increased by 4 million in value, which it has recorded in its financial statements. I love this kind of a thing, because when they tell me already they have recorded it in the financial statements, I will do nothing. So meaning that this is basically noise. They want to use this to confuse you. It's noise. They've already recorded it. So that is noise. It can't even go to my goodwill, nothing. We are told, number 3, after the acquisition, so that will not assist me at all in my goodwill calculation. Following the acquisition, Lima Limited sold goods to KEEP. This will not assist me in my goodwill, because Lima sold, yeah, to KEEP. Yeah, don't worry about that. I'll be able to demonstrate. There has been no impairment. Very good. All items within this, NCI will help me in my goodwill calculation. So they want me to calculate the value of goodwill arising on who? Acquisition of Lima Limited. Ladies and gentlemen, how do we get our goodwill really? To get our goodwill is normally what we do. To get goodwill for reporting. We normally take the total purchase consideration, what you gave out there, minus, in this case here, net assets acquired. Minus net assets acquired. And because you want to get goodwill for reporting, minus any impairment. Minus any impairment, if there is any. So we normally, to get goodwill, we'll take the purchase consideration. How much have you given out to acquire this very store? This very shop of yours? You've given 5 million. But the assets you have acquired in this case here, for example, they are worth 2 million. So it means whatever you pay over and above your net assets value is called goodwill. Yeah, goodwill. And if it's for reporting, don't forget to subtract impairment. Now, when we talk of purchase consideration, you have to be very careful. So purchase consideration, we have what will be paid by the parent. So we have parent's consideration. Yeah. And then, of course, we are not going to buy this. You don't know, like now here we are buying 75% parent. So there is another buyer. There is another buyer. So we have NCI's consideration. NCI's consideration, what they're going to pay. So remember, NCI's consideration will be always the fair value of their shares at acquisition. Fair value of their shares at acquisition. That's what you do to be able to get the total consideration. To be able to get the total consideration. So because you have done share-to-share exchange, no, before I continue, I would want to get confirmations from you as to whether we are together. Up to, have you been able to write up to here, really? Yeah, thank you so much. So to get the parents' consideration, there is something you have to know when there is share exchange. So parents' consideration. Parents' consideration. So first of all, you must get what we call number of shares issued by the parent. Issued by the parent. Number of shares issued by the parent. Is there somebody who can give me the formula? Somebody should be able to help me give Caroline the question. So number of shares issued by the parent. I'm sorry for the students who are doing FR, please. I'm sorry a little bit. Just forgive me a little bit. We'll be doing these things next semester. In AFM, we normally say post-acquisition EPS. After acquired, after you've been married. After you've been married, not unless you're another one, after you've been married, your husband's earnings plus your earnings will always be put together in some same bank account. Yeah. And of course, it is only the husband who will be able to have a mandate to withdraw, right? Yeah. Post you have been acquired. Yeah. So you take earnings of the husband plus earnings of the wife divided by nose one. Yeah. Number of shares of the husband plus number of shares of the wife. But now remember, for the wife, things normally change when you are married. You know, when you're married, things will never be the same. Yeah. So nose 2 times what we call exchange what? Exchange ratio. Nose 2 times, you know, for a lady here, so many things change, including your name. So many things change. Ladies sacrifice a lot in these marriages. So remember, for the lady, it has to be her shares must always be multiplied with what we call exchange ratio. So anytime they tell you to determine number of shares issued by the parent, you shall always remember this. So in this case here, number of shares to be issued by the parent will be nose 2 times, in this case here, exchange ratio. Nose 2 times exchange ratio. But now remember, we are not going to buy, we as the parent, we are not buying 100% of this company. So we must get, in this case here, then at the beginning here, the percentage acquired at the beginning. That is the only difference that we have between AFM and this one here. So you take the percentage acquired times nose 2 times exchange ratio. So the percentage acquired in this question is what, ladies and gentlemen? Do you remember the 75%? Are they able to remember 75%? I am alone, but I will overcome. 75%, isn't it? Nose 2, these are the number of shares of the second company. Second company is the weaker company. Second company in this case here is the subsidiary. Is a subsidiary. Is there somebody who can give me the number of shares of the subsidiary? Anybody who is able to give me the number of shares of the subsidiary, please? Please. Number of shares of the subsidiary. Let me come here. You can see the subsidiary has a share capital of 640,000. 640,000. That is share capital. And to get number of shares, you take share capital divided by share capital divided by par value. Don't forget par value. Par value. So you can see this is 640,000 and the par value is 10. Is 10. So times 640,000 all over par value, which is 10, times the exchange ratio that we got between ourselves as 2/3. 2/3. 2/3. So if there's somebody who is able to give me this figure, they're giving me 32 what? Are they able to get 32,000? Oh, yeah. Oi, wanapata figures tofauti tofauti. Wanapata figures tofauti tofauti. Wanapata figures tofauti tofauti. Hebu kweli Kweli kina calculator. Please use your calculator, please. Please use your calculator, please. We shall use our calculator, please. So all of us in this case, ladies and gentlemen, we are able to get what here? 32,000 are the shares which will be issued by who? Which will be issued by the parent. Which will be issued by the parent. So then, get ahead to tell us, therefore, consideration paid by the parent. Consideration paid by parent. We know that the parent gave out 32,000 times market price per share of the parent. Because you see, these shares which were given out are the parent shares. So we want to value the number of shares that were given out by the parent. We want to evaluate. And then we know, in this case, this guy here passed out what amount of consideration. So this will be 32,000. Is there anybody who is able to see market price per share of company one, which is the parent in the question? Oh, yes, they told us. They did tell us. They did tell us somewhere here, first paragraph. They told us here, first paragraph. Oh, yes, they told us here. They told us here, first paragraph. They told us here. They told us here. On the acquisition date, keep with our parent, share price was 40 per share. So the share price here is 40. So times 40. So are you able to give me this total value that they gave out? Ladies and gentlemen, please talk to me. Please talk to me. Please talk to me. Talk to me. So I'm being told by Mwasi that this is 1280,000. I'm being told by Mwasi that this is 1280,000. So then now we can come and we can come there and so we have this. So how about in this case here? So we have in this case here total consideration. Total consideration. So we have consideration by parent. So the parent gave 1280,000, and then we never bought 100%. There is another body called NCI, which took 25%. So for NCI, you give me their fair value at the date of acquisition because their shares were valued on acquisition. So on acquisition, is there somebody who is able to see? Anybody who is able to see on acquisition, ladies and gentlemen? They gave us this figure somewhere. Note number 7, non-controlling interest in Lima, was valued at 400 million during what year? During acquisition. During acquisition. Thank you very much. So in this case here, we have here 400. Yeah, so we have there for what year? We have there 400. Let me see these figures. Are these figures, how are these figures? We need to be very, very careful. How are those figures? Are they in thousands? How are these figures? We took one figure from, you have to be very careful how to capture them. Otherwise, you get a zero here for something that is really easy. Yeah, you can see, for example, the share capital we took here is in shillings, thousands, shillings, thousands. So even when we are reading figures from our, numbers here, like now we are reading here, 400 million, you have to chop 3 zeros. So then this becomes 400,000 like that. So is there somebody who is able to give me the gentleman, the total consideration here? Are you able to give me the total consideration? Thank you very much, 1680. So from there, ladies and gentlemen, we ask ourselves, this total consideration, how much of net assets were acquired of this subsidiary? So come and they give us the net assets of the subsidiary, net assets of SUB. Somebody who understands this topic very well doesn't write subsidiary in full. This is SUB, net assets of subsidiary at acquisition. Net assets of subsidiary at acquisition. So remember, when you acquire a business, you look at the equity side of it. You are an owner. You look at the equity side of the business. So basically, you give us what we call equity components. Equity components. You give us what we call equity components. Is there somebody who can give me examples just by listing there? Examples of equity components that you'll be acquiring when you acquire a company. Because if you go to acquire a stake at Safaricom, you can't tell me that you have bought a share of Safaricom. You bought a vehicle of Safaricom. You are buying equity. So we have ordinary shares. We have ordinary, rather share premium. We have, in this case here, any reserves or retained earnings. Those are the kind of things you guys are mentioning. So before I explain how I got 2/3, so come here. Thank you so much. Thank you so much. Yeah, any revaluation? Yeah, revaluations. Thank you so much. Thank you so much. So now we are looking at, ladies and gentlemen, the net assets at acquisition of which company? Of the subsidiary. I've seen ninjas. You know, for the number of years that I've taught this FRA, those years I used to teach these papers. Nowadays I don't teach them. All right. I know of some funny ninjas. They have a concept. But again, here, when it comes to net assets, they'll pick the net assets of company one, of the parent. That is really, really unfortunate. Remember, you're doing valuation over the subsidiary. So then, ladies and gentlemen, in this question, are you able to see our equity component? The first one there is ordinary share capital. Ordinary share capital. So the ordinary share capital, how much am I able to see there for this company, the subsidiary? I'm able to see 640,000. This one here. You can see it here, ordinary share capital of Lima. It is just 640,000. It doesn't have any share premium, no revaluation reserves, but I can see it has an equity reserve. It has an equity reserve of 8,800, and it has, this examiner was very good. He gave us retained earnings on acquisition date, 500,000. Remember, this was the acquisition date. Yeah, so mine is to simply come and copy this. So we have ordinary share capital, and gentlemen. Then we have retained earnings. Retained earnings. Retained earnings. Retained earnings is 500,000. Yeah. And then we have, in this case here, equity what here? Equity reserve. Equity reserve of 8,800. I need this question. 8,800. So in this case here, we don't have any fair value adjustments. Or rather, whatever we have had already been accounted for. Whatever we have has already been accounted for. That's what they told us. All right. So then the net assets acquired will amount to how much? Net assets acquired will amount to how much? That revaluation Ken has already been adjusted for. It has already been accounted for. It has already been accounted for. 1148,800. Yeah, and therefore our goodwill. Therefore, our goodwill, we look at the total purchase consideration. Total purchase consideration is 1148,800. We less net assets acquired. I can see very good questions. Less net assets acquired. No. 1148,800 is like that. The purchase consideration is up here, 1680,000. So is there somebody who is able to give me this goodwill? Anybody who is able to give me that? Anybody who is able to give me this goodwill? It's subtracting like that. So goodwill, I'm being given a figure of 531,200. Thank you so much. Impairment loss, 0. So goodwill at reporting will be 531,200. So remember, this is goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition. Oh, it's like I've lost some of them. And then I've seen it's like you guys are confusing between, you have got what we call full method and the partial method. The one of taking like 75% of the net assets, that is partial method. You cannot use partial method when you are given fair value of the NCI at acquisition. All right. Retained earnings, I've seen somebody asking for retained earnings. In this case here, pre-acquisition. Pre-acquisition. You see, ladies and gentlemen, this question is a bit different. You know, they have given us retained earnings at acquisition. This retained earnings given here is at acquisition, remember. It is at acquisition. Exchange ratio, okay? This is retained earnings at acquisition. First of all, let me know whether you guys are finished writing up to here. Let me know whether you guys are finished writing up to here. All right. Then now I can come to this retained earnings. I think you're getting confused a little bit, but we shall overcome. It's part of the game. It's part of the game. You see, whatever you have here, when was this company acquired? This company was acquired on 1st November 2023. And they've gone ahead to give you equities at this date of acquisition. So if it is retained earnings, you have retained earnings at acquisition. This figure here is retained earnings at acquisition. You cannot make any adjustments. How did we get, in this case here, the exchange ratio? Exchange ratio, we explained here. Maybe this is a ninja who came in a little bit late. Exchange ratio, there's a place we explained that this exchange, I remember where we did this explanation of exchange ratio here. So we said exchange ratio is number of shares of number one, company one, over number of shares of company two. So number of shares of the parent divided by what here? Divided by number of shares of company two. So then this becomes 2 over what here? 2 over 3, because we are told here the acquisition was completed through a share exchange where KIP Limited gave 2 of its own shares for 3 of Lima what year? Limit 2 over 3. 2 over 3. 2 over 3. So I hope I've been able to address that. Now, the students who are asking, why are you not taking 25%? Why are you not taking 75%? Can somebody help me explain to them? Can somebody help me explain to them? Purchase consideration minus net assets, yes, goodwill is purchase consideration minus net assets. You know, we have got 2 methods. I know you know them. We have full method. Yeah, we have full method and a partial method. So here we are using full method. Why are we using full method? It is because we are given what here? We are given non-controlling interest of the subsidiary at what year? Somebody at acquisition. And these non-controlling interests at acquisition, you can't take 25% again of this. No, you take it the way it is, isn't it? You take it the way it is, LCI the way it is. Ladies and gentlemen, please allow us to continue because we are doing a high level. And the high level revision, our aim is not to have you like getting everything. Our aim is not to have you like understanding everything. No, it's giving you what you deserve, or rather what you should do to deserve a pass. To deserve a pass. To deserve a pass. Otherwise, if you start chasing for perfection now, you can easily fail. Now, ladies and gentlemen, if that is true, then we go to number 2 of this question. Number 2 of this question, what do they want us to do? Number 2 of this question, they want us to prepare a consolidated statement of P&L and OCI. Now, this is where I learn. Nikikuja hapa kwa consolidation sasa hapa mimi ni kama Messi. Messi akipata mpira, hakuna kucheza na mpira. Hiyo lazima ni goal. Sasa hapa ndio mimi napenda. Now, when we talk of consolidated P&L, so what are you supposed to do here to consolidate? Remember, to consolidate, ladies and gentlemen, you take the figures of the parent plus the figures of the subsidiary. The figures of the subsidiary, if it's income statement, these ones here must be prorated. Do you remember the 6 over 12? Do you remember the 6 over 12? Do they remember this 6 over 12? Yeah, we stayed with this subsidiary for 6 months. All right, now we are at home. Now, ladies and gentlemen, what are we doing? First of all, we do what we call a pro forma. So the pro forma, you copy this table the way it is. You copy this table the way it is. You're only copying this table the way it is. In this pro forma, you are copying this table the way it is. Have you done that? Have you been able to copy that table? You know, me, I have a very good table. Oh, I have a very good whiteboard, the best whiteboard in East Africa. Best whiteboard in East Africa. The best whiteboard in East Africa. Best whiteboard in East Africa. Very good. So my consolidated, that's all I want to use this to teach. So my consolidated revenue will be 1.8 million plus 960,000, but this 960,000 is for our whole year. This one must be time prorated for the subsidiary, so times 6/12. The cost of sales is this plus this. When I consolidate, to consolidate is the easiest. You are adding, isn't it? You are adding. But of course, don't consolidate profits. This one here will get them. You get a figure. Distribution cost, you take the one of the parent plus this one times 6/12. Administration, you take this plus this times 6/12. So you are consolidating. Don't read the additional information, though. So finance cost, you take this plus this times 6/12. Profit before tax, this I cannot consolidate. This will be something that I'll be able to get. Income tax, I'll take this plus this times 6/12. Profit for the year, I cannot consolidate that. Income, I have gain on revaluation of what year? Land. So this will be like that. This gain was for a whole year, times 6/12. Loss on fair value of equity assets, you just write like that everything. Times what year? Times 6/12. So allow me to rewrite this myself now. I mean, if you get a question on consolidation and then you fail, then you are crazy. You are crazy. This profession was not meant for you. I will be able to advise you to go and do other things. Because consolidation, everybody gets all the marks without even knowing what they are doing. Mwalimu sasa unaongea mbaya. Mimi nakumotivate. Nataka kupita hii kitu mara moja. Nataka kuja mara mbili. Ukija hapa nataka next semester ukuje BPA ama another paper. We can't do a paper like somebody was telling me the other day amefanya AFM 8 times. That is bad. Not when we are doing this low-hanging revision. You see, under low-hanging revision, our aim is not to balance things. Our low-hanging revision, what we call the last mile revision, is to ensure for each question, how do we pick the easiest mark? How do we pick the easiest marks? How do we pick the easiest marks? So then, let me now copy this. Let me copy this. I want to copy this. Unfortunately, I have to get it from this tablet of mine, but financially, it's here. So we have revenue. So you write there, of course, I know you guys are very good. You say keep group. Consolidated income statement. Consolidated income statement. For the year ended, blah, 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 blah. You get a rule. Always use the ruler here. Very good. Then we start now with our consolidations. So we start with revenue. So revenue is 1.8 million for keep plus 960,000 times 6/12. Sasa pia utapata ninja ambayo ni joker. Ninja ni joker, anachukua calculator hadi afinya hii ni pro forma. Pro forma, we're just arranging things in it. Then later on, we should be able to do cost of sales. So cost of sales, I'm taking there 1040,000 plus 440,000. This has to be time prorated. Then we have gross profit. You leave some space for gross profit. Then we have distribution costs. Distribution costs. We have here 94,400. 94,400 plus 48,000. This has to be time prorated because we stayed with this subsidiary for just 6 months. Then we have administrative, admin expenses. So admin expenses, ladies and gentlemen, we have 108,000. So 108,000 plus 92,000, 6/12. Then we have a finance cost, the interest element. So finance cost, what we have over here, we have 6,000 plus 4,800 times 6/12. Then we have what we call profit before tax. Yeah. I continue with the journey. Then we have tax expense. So tax expenditure, what are we taking there? I can see 192,000 or what? 192,000 plus 192,000. 192,000 plus 111,200. I could be wrong at times because of eyes. At times, yeah. Then we go to profit after tax. Very good. Or profit for the year. And then we have what we call other comprehensive incomes, OCI. Other comprehensive. I know you know this. Don't even have to write in the full. So the OCI, I can see we have a gain on revaluation of land. Gain on land. So we have there 10,000. Just for now, just write times 6/12. Later on, you read, you may be able to make some adjustments. But for now, just write everything like that. And then we have a loss on fair value. Loss on fair value. Loss on fair value, which is 2,800. 2,800 plus 1,600 times 6/12. Right like that. Now, and that, of course, now will be the end of this. So we have here what we call the total comprehensive incomes. Now, can I ask you a question? What if after writing like this, the invigilator says, hey, you guys have only 2 minutes to hand over your paper? If I write like this, and then I don't have any time to do any adjustments, what I'll do is to pick my calculator. I will pick my calculator, and then I'll be able to add up everything. I write now my final answers here, the way they are, if I don't have time for adjustments. So if I don't have time for adjustments, whatever answer I get here for revenue will be wrong. The cost of sales will be wrong. In most cases, this distribution cost will be correct. Yeah. In most cases, even this admin will be correct. In all cases, without adjustments, finance cost will be correct. Tax is always correct. There are no much adjustments there, ladies and gentlemen. So you'll be surprised, like now this student, you see like this question, how many marks does it have? This question, if you look at it very well, it has 12 marks. So you'll get 12 marks. In the marking scheme, the examiner says any 6 ticks, each at 2, for example. So then that means that if you get 6 ticks, you get 12. But you see now, huyu jamaa wangu mwenye alikuja kwa class alo hanging, amepata 4 ticks. 1, 2, 3, 4. So this crazy guy has 8 out of 12, and then he'll come to the advanced level next semester saying how good he was in financial reporting. But you see, it's because we gave them the secret. Because most of the times when you're marking these scripts, ladies and gentlemen, trust you me, very many students, the only thing they write for this one, is basically telling us we have keep group, consolidated income statement, and then they leave it blank. And then up there, you see them trying to do so many crazy workings, and those workings are never marked. They are never marked by anybody. What they mark are these figures that you have in the extracted financial statements, extracts, or like now these full statements. That's what they mark. Yeah, what we get, the guys who are with me here in FR, I'm so sure guys will be able to tell you, like last semester, the ones who are doing FR, we helped them with these shortcuts and they passed without knowing how they passed. This is what made you pass. And this is what will make you pass in your advanced financial report, in your advanced financial reporting, yes. All right. So now, are they ready? We don't want to take also this also very lazy approach. Are they ready? We do some few adjustments, because again, there are some adjustments with adjustments that are so easy. They are so easy. There are some adjustments which are so easy that again, a student who has been to RCM, which is the best college, a CPA college now in East Africa, yeah, should be able. I mean, you can't tell me that you only get 4 ticks alone, but unless you are so lazy too, which will be very bad. Yeah. So in this case, ladies and gentlemen, let's get to read a few things here. We do just basic adjustments, very basic adjustments. We are doing very, very basic adjustments, very basic adjustments. All right. So these basic adjustments, let's now pick them up. So number one, leave it that out because already this has been adjusted for. We look at note number, like if I'm the one doing this, I will start with this internal sales. Internal sales are normally what year? They are normally fake. Internal sales are normally fake. Internal sales, parent and subsidiary, they're not supposed to be doing business per se because they are one. Why we are calling them group, it's because now the group is one company. So when you hear that, when you hear, ladies and gentlemen, that a parent sold to a subsidiary, or a subsidiary sold to a parent, so just akin to you taking money from one part of the side of a pocket to the other side of to the other pocket. There is no additional sales there. That sales is fake. So we are told here, following the acquisition, Lima Limited sold goods to Keep Limited worth 160,000. Remember, we are cutting 3 zeros, eh? So when you read here, you cut 3 zeros, worth 160,000, which had originally cost Lima 120 million. Of these goods worth 48 million remained in Keep. First of all, we start with this fake sale of 160,000. So remember, when you have intra sales, internal sales, those are fake sales. They should be removed. They should be eliminated from our group sales. So you come here, you say minus 160,000. That is the first thing you do. And then you also remove it from the cost of sales. Because in the cost of sales, we have purchases. One company is saying, I purchased goods worth 160,000. So you remove it from cost of sales. And you also remove it from what here? From revenue. All right. So you see, like now, for example, for revenue, once you have done that, you're going to get now again another tick. So those 4 ticks plus this one, that is 5. So now you are at 10 out of 12. We will not call you a genius because this one has got no much adjustments. Revenue has got no much adjustments. It's only the inter-sales you're required to go and deduct and say this is fake. Now, anytime we have inter-sales, then we must have what we call unrealized profits on stock. So we must come here and give them UPS. Yeah. So UPS, ladies and gentlemen, unrealized profit on stock, we always use what we call the profit what here? The profit margin. The profit margin. So you take profit margin and the name of this girl called RISPA. So anytime they want us to give them UPS, we shall take profit margin times RIS, where RIS stands for what we call remaining intra-sales. Remaining intra-sales. Remaining intra-sales. And the other day I made you laugh a little bit, ladies and gentlemen. The other day, no, first of all, have you guys been able to write up to here? I also don't want to rush too fast. Have you been able to write up to here? Thank you so much. You see, your examiner in all these cases cannot give you the markup. They cannot give you margin. They'll give you markup. So when they tell me, for example, markup, don't write this. When they tell me markup is 10 over 100, what do you know about margin? What do we know about margin? What do we know about margin, somebody? Yeah, margin ina makalio makubwa, isn't it? Makalio ya margin always ni makubwa. So inakuwa margin, it will be 10 over 10 plus 100 hapa. Inakuwa 10 over 1, 10 like that. Paul nasema kwamba ati ni vera. Sijui anamaanisha namna gani. Ndio nasema margin ni vera. Yeah. Vera. Namna hiyo. Hiyo ni margin. Hiyo ni margin. Is that okay? Hiyo ni margin. So if you are given, ladies and gentlemen, please don't let me down on this. This will come. If you're given that markup is A over B, then automatically my margin, which is vera, will be A over A plus B. Anytime in this case here you have this right, then automatically you are what here? You are okay. You are okay. You are very, very okay. In this very question, the examiner never gave us markup. The examiner wanted us to calculate margin ourselves. So how do we calculate margin ourselves from first principles? You take the profit all over what here, somebody? All over sales. Profit all over sales. So you take profit all over what here? Profit all over revenue, or profit all over what here? All over sales. I love that. I love that. Very good. Very, very good. Ladies and gentlemen, please read this very well. Read this very, very well. I would want us to really move together here. You can see from this past paper, They have told us that sales from Lima to Keep was 100. No, let me share this. I can share my yeah, they're telling us here, note number 4, that following the acquisition, Lima Limited sold goods to Keep worth 160 million. So the sales is 160 million, which had originally cost Lima 120 million. So in this case here, the total profit made. So total profit made. We sold in this case here these goods for 160,000, and they had cost us originally 120,000. So we made a profit of what here, somebody 40,000. And now I can come and translate this to margin, so it will be 40,000 all over sales. The selling sales 160,000. Whatever you get, you can multiply with 100. So I want to get profit margin. Is there somebody who can give me this profit margin? This is 25% like that. So then please, if you've been able to get this 25%, I'm going to apply it in the RISPA equation. So in the RISPA equation, then we'll have here UPS being equal to profit margin of 25% times the remaining out of this goods that were sold to our sister department, to our sister company. Not all of them had been sold outside there for the profit to be realized. Yeah, so 25% of what here, not 48 million, Fred, you shall always knock the 3 zeros so that you don't get confused. I always get people getting confused there. So 25% of the 48,000, which Cyprian is telling me, will end up giving us what year? Will end up giving us 12,000. 12,000. Now, ladies and gentlemen, I know you guys are really, really strong. When you get this UPS, we normally do two adjustments. Is there somebody who is able to remember those two adjustments? Yeah, number 1, LC, we added to cost of sales to metal 48,000 wapis. Thanks for asking. Yeah, so you can see here, of these goods, what 48 million remained in Keep Limited in inventory at the year end. Those are the remaining. Yeah, we less from group inventory, we add to cost of sales. So go to your cost of sales, So your cost of sales adjustment here, tell us plus 12,000. It's fake profit. So you must be able to do what you have to add it back like that. I would have subtracted it from group inventory, but you see now here, I'm not required to do a statement of financial position. So I only pass one entry. So up to here, ladies and gentlemen, somehow are we together? Somehow it doesn't have to be like 100% being together. No. Somehow, because I simply want you to get marks that can take you to the next level. Yes. Thank you so much. And then if I'm the one doing this, then I'm now through with this. I will be able to come back here. I love this UPFA and realized profit on fixed assets, UPFA. Note number 3. Valerie, why are you adding? It's what you guys have done this topic in class, right? Have you done this topic in class? Because again, if I start going into those nitty-gritties, really, it will be disastrous. Because for me, I would want you cram. There are things I want you to cram. But just to maybe answer this lady, not unless you want us again to, you want us to become very scientific. Do you want us to become very, very scientific? Because how do we get cost of sales? We normally take opening stock, add purchases, then we less what here? Closing stock. Yeah, we add less closing stock, sorry. So assuming in this case here, the opening stock was 100, purchases is 200, and then closing stock is, for example, 50, yeah? Can you kindly give me this cost of sales? Kindly give me this cost of sales, this 300 minus 50. So this is 250. Now, assuming in this case here, the closing stock was overstated. Assuming the closing stock was overstated by what here, somebody? By 20. assuming the closing stock was overstated by 20. Now I've discovered that this closing stock was overstated by 20. Then I have to correct, I have to get what we call correct cost of what year? Cost of sales. How do I correct this, get the correct cost of sales? I will take the original one, which was 250, plus this overstatement of what year? Of 20. So 250 plus 20 gives me what, ladies and gentlemen? This gives me 270. This is option number 1. Option number 2, I can come and make the corrections here. Opening stock haina shida, purchases haina shida, lakini closing stock was overstated by 20. Closing stock was overstated by 20. So the correct closing stock should be what here, somebody? Should be 30. So are you able, ladies and gentlemen, in this case here to subtract and confirm? Then we'll end up getting to 70 there. Yes. Now, ladies and gentlemen, remember in our case, we have a profit in stock. We have profit, fake profit in our stocks, in our closing stock. So this fake profit, they must have done what you remember. IAS 2 tells us never to put profits on stock. So you have overstated your stock when you put profits there. So when you put profit in your stock, you have overstated your closing stock. And when you overstate your closing stock, which is a deduction here, then automatically the cost of sales is understated. But if I were you, some of these things that you can cram them, just believe me. I've taught this thing for very long, but nakwenda kwa science. But nakwenda kwa science. Where you a cost of sales, I will always do 2 things with UPS. Add it to cost of sales, subtract it from group what here inventory. Are we together there? Are we together there? Are we together there? Are we together there? I would want to get confirmation that, let's just cram it that way. We get this thing out of our way. And then if there is anybody who would want like very practical classes of group consolidation, then they can come after exams. After exams, I can welcome them. And then now we can go to those things where we are now saying, let's now get practical into this. All right. For now, what have we said? For now, what have we said? We've said for UPS, add to cost of sales, subtract from what here somebody, group inventory. Subtract from group inventory. How do we get the 25%? We did this working here. We did this working somewhere. There's a working we did. We said profit margin is profit over sales. And if you remember very well, we sold goods worth 120 that cost us 120,000. We sold them for 160,000. So the profit is 40,000. So you come and take this profit of 40,000 over 160,000, which will end up giving us what here? 25%. So UPS, is unrealized profits on what here? Stock. Thank you so much. You could be using another name. I normally see so many other names. Now from there, ladies and gentlemen, if you allow me, then I will be able to straight away go to this fixed asset. I like fixed assets transferred because I'll end up getting all the marks without knowing what I'm doing. Without knowing what I'm doing there. All right. So we are told here, note number three, that after acquisition on 1st November 2023, KIP Limited transferred plant equipment to Lima Limited at an agreed value of 20 million. 20 million. All right. So these are transfer of what here somebody? A transfer. Thank you very much, PK. A transfer of a plant item. This equipment had a carrying amount of 16,000, by the way, this 20,000 at the date of transfer. And the remaining useful life is 2.5 years. KIP Limited accounted for the gain from this transaction by reducing its depreciation expense. So depreciation is charged to cost of what year? Sales. This is the easiest thing. This I will always get it right. Actually, with my eyes closed, let me show you. Only that you cannot see me. UPFA is the easiest. And realized profits on fixed assets transferred. And realized profits on fixed assets transferred. Fixed assets transferred. What do you mean? Or you cannot see me. Fixed assets transferred. Thank you. Now, ladies and gentlemen, this is really, I love this. Because for fixed asset transfer, it's normally the easiest, really. It is normally the very easiest. Let me give you a secret here, which will make you to always know this. So the plant transfer, remember this is plant transfer. Plant transfer. Very, very good. Now, so the transfer price was 20,000. So this one here had cost us what here? This one had cost us, ladies and gentlemen. This one had cost us what here? This plant had cost us 16,000. So then this one here, ladies and gentlemen, will give me a profit of what here? A profit of 4,000. A profit of 4,000. So when I get that profit of 4,000, what am I supposed to do with it? When I get this profit of 4,000, what am I supposed to do with it? It's a fake profit. I only transferred this thing to a sister department and I am claiming that I got a profit. Shame on you. That profit is fake. That profit is fake. So straight away, if it's fake, you add it to what you're somebody to cost of who? Add it to cost of what you're somebody? Cost of sales. Return it back. It's a fake profit, expensive. So these fake profits, you normally expense them. So add it to cost of sales. It's a markup button I'm passing. Very happy I'm passing. I'm very clever because this passing is all about what here? It's all about exam technique. It's not about how good you are. Yeah. Now remember for UPFA, there are two things that you must always do. First of all, there is that gain on this plant that was transferred. And then number two, remember that this other branch, this other company that you transferred these goods to, they are depreciating wrongly. They're depreciating using what here? A wrong amount. A wrong amount. They're depreciating using a wrong amount because the correct amount within the group should be 16,000. But now they're depreciating using a wrong amount. So then I must, in this case, ladies and gentlemen, calculate what we call the extra depreciation. Extra depreciation. So this is the erroneous. From the group, they should have pegged their depreciation on 16,000, not 20,000, because there's a big profit there. Ladies and gentlemen, how do I get this extra depreciation per annum? You simply take, in this case here, there, and realize profits on fixed assets over remaining useful life. It's always straight line. It's always straight line. So the UPFA that you have here is 4,000, and the remaining useful life, how many years are you going to see there, which are remaining? How many years do we have there? 2.5. So they've been charging this expense wrongly. So 4,000 divided by 2.5 will give me what figure? I'm told this will give me 2 point. No. This will give me 1,600. 1,600. But now remember that this is 1,600 for a whole year. For a whole year, because depreciation is time-based. And the subsidiary was ours for 6 months. 6 months. So then therefore, the correct one will be 1,600 times 6/12, which is 800. So remember that this is an expenditure that they were claiming, erroneously. So please, always, this is very easy. You deduct it from cost of sales. Deduct it from the cost of what year? Deduct it from the cost of sales. So go to your cost of sales here. So it means automatically your cost of sales itself is exaggerated. So you'll be able to come and say here, minus 800. Minus 800, like that. Minus 800, like that. Do we have any other working? Do we have any other working? I'll be able to give you very, very good shortcuts. No. So then are you able to give me these final answers? Yeah, I can see Mercy crying. I don't see any reason for crying, not unless you're not really following. I scroll down. It has very few. So many people will tell you it has a lot, but once you understand, like if it is UPFA, what am I supposed to do? First of all, get that profit on this fixed asset that was transferred. Honestly, that one, Mercy, at your level, will be able to handle it very easy. Because this is an asset, you've been given value is 16,000. It has been sold for 20,000. Get that profit there. Yeah. All right. Profit, not revaluation. Is revaluation always added to cost of sales? So first of all, that's scrolling. I hope it is okay. Now, ladies and gentlemen, the only thing I want you guys to give me are now answers. Give me answers here. Give me answers, please. Give me answers, please. So I'm being told that revenue, the correct revenue, what figure are they able to give me? $21,20,000. 21,20,000. How about in this case here, the consolidated cost of sales? Consolidated cost of sales, 11,152. And ensure everybody please put up your calculator and calculate this. And don't, you see, students will put like a bracket here, which is wrong. That bracket is not there totally. So you take your calculator, you say 1.8 million times, or rather plus 960,000 times 6/12 minus 160,000 without putting any brackets anywhere. You're not putting brackets anywhere. So they're getting, in this case here, what are they getting? What are they getting there? 11,15,200. So please subtract there and give me my gross profit. Subtract there and give me my gross profit. 10,04, 800, 10,04,800, 10,04,800. Thank you so much. Are you able to give me the distribution cost? Are you able to give me the distribution cost, my very good students? Are you able to give me the distribution cost? Okay, I'll be able to answer those questions. 118,400, 118,400. Very good question there. How about administration cost? How about administration cost? 154,000. Thank you so much. How about finance cost? Finance cost, I'm being given a figure of what here? 8,400. Is there somebody who is able to see? Is there somebody who is able to see the taxation element? Ensure that you are picking your calculator and doing this on your own. You should be able to pick your calculator and do this on your own. Do this on your own. Do this on your own. So tax is 247,600. 247,600. Yeah, like that. So I believe you have already the profit before tax, and you have in this case here the profit after tax. Just for following up purposes later, are you able to give me the profit before tax? 724,000. And then profit after tax will be what here, somebody? 476. 476, 400. All right. And then now you'll be able to get like this gain on land. Yeah. It became once, etc. You get some people saying, arguing, don't multiply this. I mean, these ones, what I'll do, I'll just pick them the way they are without even reasoning. It could be wrong. But you see the way we mark, ladies and gentlemen, please listen. By the time you reach here, you have this right, you have this right. You don't mark the totals, So we have that right, we have that. You have more than the 12 marks. You'll be able to get 12 over 12 in this question. So a student is asking there, what is the difference between depreciation overcharge and depreciation what here under charge? You see, ladies and gentlemen, like in this very question here, what we have? We have a profit, not a loss. So this is a profit, fake profit that we have. Yeah. So this profit that we have here, it means automatically that the person who is accounting for depreciation is able to do what here? He is able to charge a higher depreciation. He is charging a higher depreciation wrongly. Yeah. So automatically that is an overcharge. So profit, we normally talk of overcharge. So what do we do with the overcharge? You subtract. What I normally see, always, please listen, this is something you can easily get without even thinking totally. When this one is positive, the issue of depreciation must be negative. Please listen. When this one, when you are adding when it's a profit, then automatically this has to be a negative. What if the transfer of this asset led to a loss? What if I was saying here minus 4,000? Then the depreciation should have been the opposite. You simply come and say what here, somebody plus 800. Stop using those words of overcharge and what here under charge. You'll confuse yourself. All right. So I repeat, if, for example, here we got a profit out of transferring this asset, so it means automatically the profit will be added here because it's fake. We're expensing it. The depreciation thereon will be negative. Like that. Once you reach there, ladies and gentlemen, then we'll be able to get so many marks. So is that okay, ladies and gentlemen? Is that okay, ladies and gentlemen? Is that okay, ladies and gentlemen? Have we been able to get something? Have you been able to get something? Huh? What if we are not given the profit on asset? I like the questions you guys are asking. Trust you me, those questions are at PhD level. And yet you need just an undergraduate level to pass. Don't overthink. Even the way you are revising currently, don't go like you're revising so intensively. No, that is not what CIFA is looking out for you to be able to pass. Any student who is able to do this, what I've done here, will be able to pass very easily, and you'll be able to even realize, I mean, this student has even done it so highly. Because, I mean, how long will this take you to do it in an exam to reach here? It will take you an hour. If you have to do this strictly within 37 minutes, you can't even reach where we have reached. Remember, CIFA exams are all about what here, ensuring that you dwell on one question for so long. And the students who will tend to dwell on one question for so long are those students who are what here perfectionists. If you want perfectionism, trust you me, like this student when I was trying to tell this guy who told me has failed this AFM 7-8 times. When you sit down with this guy, you realize that this guy is like a perfectionist. He wants to understand everything. If you want to understand everything, ladies and gentlemen, remember, some of you are doing 5 papers. You have a job. You have a wife or a husband. And now you want to understand, you will lose one of these. You'll become international design. Ladies and gentlemen, it has been a pleasure hosting you this morning. I'll be coming back to you later today. To what time here? At is it 6 p.m. for AFM? I should be able to give you more time now to do your own things, isn't it? Or you want another subject? You want another subject? You want us to do another subject? They want us to do everything, cash flow, everything, so we shall be able to overcome. I want to take this opportunity to thank you so much. Most of you took advantage of our offer. Yeah, the offer, you were able to pay that offer, which really means lots of support to us, lots of support to us. And it's because of that that you're able to do what here, to give you these free sessions. Otherwise, I will not be able to mount this kind of a wonderful class if we don't have enough resources. So thank you so much. So what we can do maybe today, because today at planned I only do one class mchana, alafu niende kwa audit farm Westlands. Yeah. Pia niko quite a tight schedule because I have a podcast to do. Yeah, we have a podcast to do. Remember, we have, are you aware that we have RCM radio? Are you aware that we have RCM radio at St. Ellie's house? So the product I would want to build. It's very, very good. I mean, the studios are very, very nice. St. Ellie's house is next to Supreme Court. Please visit us. Supreme Court. Yeah. So then today I'll not be able to give you any other class apart from the AFM at 6 p.m. But tomorrow I'll be yours faithfully. I'll dedicate tomorrow to be here the whole day for you. I'll be able to do so many sessions with you tomorrow. All right. On overcharge and depreciation, Elijah, those things are not relevant. Trust you me. Elijah, look at this thing. When you are time pressured in an exam, do you think a normal student will be able to really even read at that level? If I were you, it will be this normal easy things. Even at times I see how you guys make your discussions, Yeah, then I know that you guys are overreading, and I know that you should not overread. You should not overread. Don't overread. Mwalimu, the app is working very well, but is there a way we can increase the speed? There are things that we are working on at the moment. I'm so sure the app will be perfect from next semester. From next semester, the app will be very okay. For now, you guys, you'd not even get to enjoy the offline, but from next semester it will be there. The challenge we have, you see, for the developers to make any change, they have to lock it up. So students cannot be able to access it. And you see them tell you whatever small change, they need 2 days, they need 3 days. And these are guys from India there, they don't understand the pressure that you guys are in terms of studying. So for now, I may not promise lots of things, but at least I'm so sure it is able to help you guys do a few things here and there. Otherwise, thank you so much. Let's see each other today at 6 p.m. Injury time. Like college itakuwa lini. Okay, Kevin, now I get you. I'll be able to tell you. Internship, we can talk. But first of all, let's get to pass. Let's get to pass these papers. Thank you so much. 236 have attended today's session. Yesterday it was 270 something. 270 something. Yeah. Where to find this? Let me talk to some guy to upload these videos pretty fast. Yeah. We shall overcome. Bye-bye. Bye-bye, 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 bye-bye. Thank you so much, PK. Thank you so much. I will also upload it in the AFR. Bye.